In this video, we want to demonstrate to you a retirement concept that could amaze you. Retirement is a major concern to most people. We certainly don't want to be left out on the street corner just trying to survive. The hope for all of us is that we can retire comfortably. One of the biggest problems we face is taxes. You earn it, they tax it. You save it, they tax it. You spend it, they tax it. You die, they tax it. The traditional retirement plans definitely are lacking. Even Time magazine has expressed its concern over the effectiveness of the 401k. The popular 401k has these features. Tax-deferred accumulation, that's good. Tax-deductible contributions, that's good. At retirement, you pay tax on much higher numbers than if you just paid the tax at the time of the investment. The historical average in 401ks over the last 50 years has been less than 5%. They actually brag about that. The reason it is as low as it is, it loses value on the average of 3 out of 10 years. One of the most painful aspects of it is that the funds are taxable upon withdrawal, and again, who knows what the tax rate will be then. If just as you are ready to retire, the market should crash again, you will really be in a fix. Time magazine said that the 401k is a lousy idea. Let's talk about something that is called Indexed Universal Life. Here are some features. You set aside money that is indexed to the S&P 500. You actually accumulate the funds tax-free. You earn interest indexed to the upward movement of the market. One of the most important features is that there is no downside risk. In other words, you cannot lose money on your investment. You lock in the gains every year. Consider this, at retirement you take tax-free income. If you die before completing the plan, your heirs receive a tax-free plan completion benefit. In other words, they receive the final retirement proceeds tax-free. Let's take a look at the advantage of no downside risk. This is an illustration of the S&P 500 between 2007 and 2012. This individual has an account value of $100,000 in 2007. Because of the tremendous downturn in the market in 2008, 38%, he lost a lot of money. Even though there were significant gains for a couple of years. After that, he only had $88,275 in 2012. Let's take a look now at the same individual if he had $100,000 in an indexed universal life plan in 2007. Because of not losing any money in 2008 during the market crash and gaining significant income in the next 2 years, he would have $118,734 in 2012. That's an increase of over $30,000 over the earnings in the S&P 500. Of course, it's not a question of if the market will crash again. It's just a matter of when. To review, let's take a look at some facts. 401k earnings have averaged less than 5% over the years. Negative years hurt. Indexed universal life contracts don't have negative years. All other indexes go negative on average 3 out of 10 years. Your cash account stays level in market downturns with indexed universal life contracts. Negative numbers have to be made up by much larger positive numbers to get even in the 401k. Let's compare a typical 401k or IRA with the Indexed Universal Life Plan. First, the 401k. This is a male, age 40. he invests $500 per month in the 401k. However, this has given him a tax deduction. He reinvests those tax savings into the 401k. This makes his investment $604 per month. By age 65, he has invested $181,200. His account value at age 65 is $315,527 based on historical projections. When he begins to take income from the 401k, he will have to pay taxes on his income. His yearly income will be just $14,025 after taxes. If he should die at age 65, his beneficiary could receive a taxable lump sum of $315,527. Now let's take a look at the indexed universal life. Because he is investing after-tax dollars, he will only put in $500 per month. He will have invested $150,000 by age 65. Because he doesn't suffer any downside risk during the accumulation years, his account value will be $356,166 based on historical projections. Because he can take out the money tax-free, which is the most important aspect of this plan, his income would be $27,136 per year. And this is a very conservative estimate. His tax-free benefit at age 65 would be $426,201. You can find me at GES Financial Services, 408-314-8858. Our website is gesfinancialservices.com. Thank you.